Chapter 1. Understanding Market Cycles, the Foundation of Accumulation. Before you can accumulate correctly, you must understand one truth. Markets move in cycles, not randomly, not emotionally, but rhythmically. If you fail to understand cycles, you will buy at the wrong time, panic at the wrong time, and sell at the wrong time. Accumulation only works when you understand where you are in the cycle. The 4 phases of every market. Every financial market, crypto, stocks, real estate, moves through 4 primary phases. 1. Accumulation. 2. Expansion. 3. Distribution. 4. Decline. Let's break them down simply. Phase 1. Accumulation, where wealth is quietly built. This phase happens after a major decline. Prices have fallen, the excitement is gone, media attention is low. Most people believe the market is dead. This is where disciplined investors begin building positions. Charts during accumulation often move sideways. Price consolidates. Volatility decreases. Fear is still present, but selling pressure weakens. This is where you want to be prepared. Not guessing, not gambling. Positioning. Phase 2. Expansion, where the public starts to notice. After accumulation comes expansion. Price begins to rise steadily. Higher highs, higher lows. Momentum builds. News becomes positive. Social media lights up. People say, "I knew it would go up." This is not where accumulation begins. This is where your earlier patience begins to pay off. Expansion rewards preparation. Phase 3. Distribution, where smart money exits. At the top of a cycle, something subtle happens. Price is still high. Excitement is extreme. Everyone feels confident. But large investors begin slowly selling into strength. The chart may move sideways again, similar to accumulation, but the psychology is completely different. Accumulation happens in fear. Distribution happens in euphoria. If you do not understand cycles, you will confuse the two. Phase 4. Decline, where emotions take control. After distribution, decline begins. Prices fall rapidly. Optimism turns to confusion. Confusion turns to fear. This is where uneducated investors panic sell. This is also where the next accumulation phase begins forming, quietly, and the cycle repeats. Why this matters for you? If you understand market cycles, you stop reacting emotionally. You stop chasing green candles. You stop buying peaks. You begin positioning during weakness. You recognize opportunity where others see fear. Accumulation is not about predicting the exact bottom. It is about recognizing when a market has entered a value zone within the cycle. You do not need perfection. You need understanding. The beginner's rule. If you remember nothing else from this chapter, remember this. Wealth is built during boredom. Wealth is realized during excitement. Most people do the opposite. You will not. In the next chapter, we will begin learning how to identify potential bottoms and resistance levels on a chart, the practical tools that turn cycle knowledge into strategic action. You now have the foundation, and foundations determine everything built on top.